Are you ready to learn the secrets of investing from the Oracle of Omaha himself, Warren Buffett? In today's episode, we're diving into the world of investing in 2023, following the timeless wisdom and principles of one of the greatest investors of all time. Welcome back to our channel. In this video, we're very thrilled to explore the investment strategies and philosophies of the Oracle of Omaha, Warren Buffett, for this year, 2023. With over 6 decades of unparalleled success in the investing world, Buffett's timeless wisdom and principles have consistently outperformed the market, earning him the admiration and respect of investors worldwide. As we stand at the cusp of a new era marked by rapid technological advancements, economic recovery from the COVID-19 pandemic, and growing concerns about inflation and interest rates, it's more important than ever to understand how Buffett's approach can be adapted to navigate the complex and evolving landscape of 2023. Whether you're a seasoned investor or just starting on your investing journey, this video is what you're looking for. Offering a unique perspective on how to navigate the financial markets in 2023 using the principles that have made Warren Buffett one of the greatest investors of all time.
Say that some of the dumb things that banks do periodically have become uncovered during this period. And the banker told me one time, he says, I don't know why we keep looking for new ways to lose money when the old ones are working so well.
Warren Buffett has expressed his concerns about the current state of the banking industry. He believes that the sector is failing, and this sentiment is increasingly being echoed by others. The issues plaguing banks have come to the fore in recent times as a series of missteps and poor decisions have been revealed. Buffett has noted that the banks continue to search for new ways to lose money despite the fact that old methods seem to be working quite well. This comment, which was shared by a banker, highlights the industry's inability to learn from its past mistakes. Financial institutions have a long history of making the same errors, seemingly without absorbing the lessons that should have been learned. However, Buffett does acknowledge that the banking industry has avoided repeating the exact mistakes that led to the 2008-2009 financial crisis. This indicates that there has been some progress in the sector, but it is important to note that the avoidance of past mistakes does not mean that new ones aren't being made. Banks continue to face mounting challenges, many of which are the result of their own misguided actions.
Every now and then it bites them in a big way. It's just amazing to me that banks could make presentations to financial analysts and everything, and if one bank bought a bond at 100 and another bought it at 96, and they both held a maturity. One bank carries it at 100 and another bank carries it at 96.
Another point, Warren Buffett discussed the mistakes banks have made, highlighting their tendency to conceal losses by engaging in risky behavior and using deceptive practices to inflate earnings. He expressed concern about the bank's willingness to take unnecessary risks and manipulate figures to present a more favorable financial picture. This lack of transparency and reluctance to acknowledge mistakes can lead to systemic issues within our banking sector and, ultimately, have detrimental consequences for the overall economy. It's essential that banks prioritize ethical practices and risk management to avoid future crises and restore public confidence.
Worried about losing their money and the deposits they have in an American bank. And today, they have no reason to worry.
However, despite these bad news, Warren Buffett has reassured the public that they shouldn't worry about losing their money or deposits, even if the bank they are using is facing difficulties. He emphasized the strength of the United States financial system and its commitment to maintaining global economic stability. Buffett is confident that the U.S. government will not allow a debt ceiling crisis to jeopardize the worldwide economy. This assurance serves as a reminder that, despite potential issues with individual banks, the overall financial system is resilient and measures are in place to protect people's assets and ensure the continued functioning of the global economy. Overall, Warren Buffett's perspective on the 2023 economic recession is that it's not a repeat of the 2008-style banking crisis. While some banks may fail during this downturn, it's important for people to understand that their bank deposits are not at risk of disappearing. The financial system has evolved and adapted since the 2008 crisis, implementing safeguards and regulations designed to protect depositors and maintain stability. Therefore, even amidst a recession, individuals can have the confidence in the resilience of the banking system and the safety of their deposits. It's crucial to remain informed and vigilant, but there's no need for panic or undue concern.
Selling a stock
selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along the next day and says, I'll pay you 15, you don't sell it because the quote's 15. But some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business.
Warren Buffett also shared his thoughts and advice on investing in 2023. Warren Buffett mentioned here that market corrections are a normal and expected part of the investing landscape. They occur when stock prices temporarily decline in response to various factors, such as economic indicators, interest rate changes, or political developments. If an investor cannot handle the inherent volatility and fluctuations in the stock market, then stocks may not be the best investment choice for them. Monitoring market ups and downs and staying educated about the factors influencing them is crucial for successful investing. By keeping abreast of market trends and understanding the forces that drive stock prices, investors can make informed decisions about when to buy or sell.
The best investment against inflation is to improve your own earning power. The best passive investment, I think, is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency.
Not just that, Warren Buffett has also shared his thoughts on investing during times of high inflation. He believes that the best passive investment strategy in such an environment is to invest in good businesses. A good business typically has strong fundamentals, competitive advantages, and the ability to pass on rising costs to customers without losing market share. In a high inflation scenario, the costs of goods and services tend to rise rapidly. Companies with pricing power can better adapt to the changing economic landscape. They can maintain or even expand their profit margins, ensuring that their earnings continue to grow despite inflationary pressures. In addition, good businesses often possess other qualities that make them resilient during periods of high inflation, such as efficient management, low debt levels, and a robust balance sheet. These factors enable them to weather economic challenges and emerge even stronger once the inflationary pressures subside. Buffett's advice, therefore, is to seek out solid businesses with strong fundamentals and pricing power when investing during high inflation. By doing so, investors can position themselves to benefit from the growth and stability of these companies even amidst challenging economic conditions. Let us now look back on Warren Buffett's timeless investing principles. These foundational concepts have guided Buffett through the ever-changing financial landscape and have been the key to his long-term success. His principles include maintaining a long-term perspective, staying within one's circle of competence, and seeking a margin of safety. Warren Buffett is a firm believer in the power of long-term investing. He often emphasizes the importance of holding on to investments for an extended period, allowing compounding to work its magic. This approach is rooted in the belief that, over time, good businesses will grow in value while temporary market fluctuations will be smoothed out. The long-term perspective encourages investors to focus on the fundamentals of a business rather than short-term price movements or market noise. By doing so, investors can make rational decisions based on the true value of the company instead of getting caught up in the emotions of market fluctuations. Additionally, this mindset helps investors avoid the pitfalls of frequent trading, such as high transaction costs and capital gains taxes. Another cornerstone of Buffett's investing philosophy is the idea of staying within one's circle of competence. This means investing only in businesses that you thoroughly understand and can reasonably predict their future performance. By concentrating on industries and companies that you're familiar with, you can make more informed decisions and mitigate the risks associated with investing in unfamiliar territory. To apply this principle, start by assessing your knowledge and experience in various sectors. Identify the industries in which you have a deeper understanding or a natural interest and focus your investment research on those areas. This approach will not only improve your decision-making abilities, but also help you enjoy the investment process more. The margin of safety is a concept that Buffett learned from his mentor, Benjamin Graham, and it has become a cornerstone of his investment strategy. It involves determining the intrinsic value of a company, the underlying worth of a business based on its cash flows and assets, and comparing that to its market price. If the market price is significantly lower than the intrinsic value, it provides a margin of safety, reducing the risk of loss and increasing the potential for profit. Calculating the intrinsic value of a business can be challenging, as it requires a deep understanding of the company's financials and the ability to make reasonable assumptions about its future prospects. However, by seeking a margin of safety, investors can mitigate risks and improve their odds of success. As we look at the market landscape in 2023, it's essential to consider the broader economic outlook and the key trends shaping the investing environment. With the global economy recovering from the impacts of the COVID-19 pandemic, various factors are influencing investment opportunities, such as fiscal and monetary policies, inflation, and the ongoing transition to a more digital and sustainable economy. Understanding these macroeconomic factors can help investors identify areas of growth and potential risks in the market. For example, businesses that stand to benefit from government stimulus packages or industries poised for growth in a post-pandemic world may present attractive investment opportunities. Let's talk about the role of technology and disruptive innovation. Technology and disruptive innovation continue to be significant drivers of change in the global economy, reshaping industries and creating new markets. Companies at the forefront of these trends, such as those in artificial intelligence, electric vehicles, and renewable energy, offer exciting investment prospects. Buffett has historically been cautious about investing in technology companies as they often fall outside of his circle of competence. However, he has recognized the potential in certain tech stocks, such as Apple, which became one of Berkshire Hathaway's largest holdings in recent years. When assessing opportunities in this rapidly evolving sector, consider the company's competitive advantage, the strength of its business model, and whether it aligns with your circle of competence. In 2023, concerns about inflation and its effect on interest rates have come to the forefront. Rising inflation can lead to higher interest rates, which can impact stock prices by increasing borrowing costs for companies and making fixed income investments more attractive in comparison. Understanding the relationship between inflation and interest rates is crucial for investors, as these factors can influence the market's overall direction. Warren Buffett has expressed that in the long term, stocks are the best investment vehicle for beating inflation. Investing in businesses with strong pricing power and robust competitive advantages can help protect your portfolio against the eroding effects of inflation. Now, what about the global market? The global market offers a plethora of investment opportunities and risks for investors in 2023. Geopolitical tensions, trade wars, and emerging market risks can all impact investment decisions. Buffett advises focusing on businesses with durable competitive advantages, regardless of the country or region in which they operate. When evaluating global investment opportunities, consider the strength of the business, its management team, and its ability to navigate the challenges unique to its market. Additionally, ensure that any international investments fit within your circle of competence and provide a margin of safety. Value investing, a core component of Buffett's approach, involves buying undervalued stocks with the expectation that their true value will eventually be recognized by the market. In today's fast-paced market, dominated by disruptive technologies and rapid innovation, identifying undervalued companies can be challenging. Applying Buffett's principles in this environment requires diligent research and patience. Look for companies with strong financials, attractive valuations, and durable competitive advantage. It's essential to maintain discipline and not be swayed by market hype or fear, focusing instead on the long-term potential of each investment. In the age of disruption, identifying companies with wide economic moats, competitive advantages that protect them from competitors, has become even more critical. Buffett seeks businesses with long-lasting moats, such as strong brand recognition, cost advantages, or superior network effects, as these can lead to sustained profitability and growth. When evaluating political investments, assess the strength and durability of their competitive advantages, especially in industries undergoing rapid change. Companies with robust moats are more likely to withstand disruption and deliver long-term value for investors. Warren Buffett has been an advocate of low-cost index funds for individual investors, citing their ability to deliver market returns with minimal fees and effort. In the current market environment, index funds and passive investing strategies can provide diversification and exposure to a broad range of companies, sectors, and geographies. While stock pricing can be a rewarding investors with the time, knowledge, and skill to apply Buffett's principles, a well-diversified portfolio that includes index funds can help manage risk and deliver consistent returns over time. Risk management is an essential component of any successful investment strategy. Buffett emphasizes the importance of maintaining a diversified portfolio to mitigate the impact of any single investment's poor performance. While he has concentrated his investments in his best ideas, He has also stressed the importance of diversification for individual investors with varying levels of expertise and risk tolerance. In 2023, managing risk and maintaining a diversified portfolio is more crucial than ever, given the rapidly changing market landscape and the potential for unexpected shocks. Investors should consider diversifying across asset classes, sectors, and geographies to minimize the risk and create a more resilient portfolio. Analyzing Berkshire Hathaway's portfolio in 2023 can provide valuable insights into Warren Buffett's recent investment decisions and strategies. Berkshire holdings include a mix of well-established, cash-generating companies and newer high-growth businesses. Some of the top holdings include Apple, Bank of America, Coca-Cola, and American Express, among others. While the portfolio primarily focuses on the U.S. market, Berkshire Hathaway has also made investments in international companies, reflecting the importance of global diversification. By examining Berkshire's portfolio, investors can glean valuable insights into the types of businesses that meet Buffett's investment criteria and apply these lessons to their own investment decisions. Not just that, studying Buffett's recent acquisitions and stock purchases can provide valuable insights into his current investment thinking. Berkshire Hathaway has made significant investments in sectors such as utilities, insurance, and consumer goods. These investments often reflect Buffett's focus on businesses with strong cash flows, stable earnings, and a durable competitive advantage. By analyzing these recent moves, investors can gain a better understanding of the types of companies and industries that Buffett sees as attractive in the current market environment. This information can be invaluable when assessing potential investment opportunities and determining which businesses align with Buffett's investment principles. Based on Berkshire Hathaway's portfolio and recent investments, several key sectors and industries stand out as attractive investment opportunities in 2023. These include the financial sector, consumer goods, technology, utilities, and healthcare. While these sectors represent a diverse range of industries, they share common characteristics that align with Buffett's investment criteria, such as strong competitive advantages, consistent cash flows, and long-term growth potential. By focusing on these sectors, investors can increase their chances of identifying high-quality businesses that meet Buffett's stringent investment requirements. As we conclude our analysis on Warren Buffett's recent investments, it's essential to recognize that his moves may not always be applicable to individual investors. However, understanding the rationale behind his decisions and the principles that guide his investment strategy can provide valuable lessons for investors seeking to emulate his success. Some key takeaways from Buffett's recent moves include the importance of staying within one's circle of competence, seeking a margin of safety, maintaining a long-term perspective, and focusing on companies with durable competitive advantages. By applying these principles to your own investment decisions, you can improve your chances of success in the ever-evolving market landscape of 2023. So there you have it. We hope you gained valuable insights into the timeless investment strategies and principles of Warren Buffett and how they can be applied to the ever-evolving financial landscape of 2023. By understanding and embracing the core tenets of Buffett's approach, such as maintaining a long-term perspective, staying within one circle of competence, and seeking a margin of safety, you'll be better equipped to navigate the complexities of today's market and make well-informed investment decisions. So, as you venture forth into the world of investing in 2023, armed with the wisdom of the Oracle of Omaha, remember to stay disciplined, focus on the long term, and continuously seek to expand your knowledge and understanding of the financial markets. By doing so, you'll not only increase your chances of success, but also develop the resilience and adaptability needed to weather the inevitable ups and downs of the market. Don't forget to share your insights in the comments section. Thank you for watching this video, and we'll see you in the next one.